So I woke up this morning and I saw a headline that probably a lot of people don't understand what was going on, and I read the headline and instantly knew what was up. But the headline was this: it was that MGM had decided that they weren't going ahead with a merger deal with this company called MWE Entain. Okay. Anyway, so MGM had planned on buying some company and then they basically just backed out of it today. And I knew what that meant was the MGM stock went up and the MW Entain went down, because the opposite must have happened when they announced that they weren't going to buy it, which would have been that this MW Entain went up and MGM would have gone down. And so sometimes you gotta ask yourself that question, like, it's so natural for me to recognize it, but for other people that aren't really into the valuation issues, why would they think this happens? And it really highlights what we call the difference between fair market value and kind of investment or strategic value. So in the fair market value world, you're talking a hypothetical buyer, you're talking a hypothetical seller. They both have perfect knowledge of what's going on. You do some calculations, you look at like a discounted cash flow, you look at market-based approaches, and you can come up with a value of a company, the fair value that you think it would go for. But when a company wants to buy another company, they usually have to have some kind of extra incentive. So they usually go and offer more than what people think the fair market value of that company would have been. So that's what MGM would have done. They would have gone out and offered more than what this MW Entertainment was worth. So that was the past. Now, why would MGM make that decision? Well, they've got their strategic value, their investment value, where what they're looking for is this idea to take over the world, get bigger, but now they're overpaying for that company. So naturally what happens is, since you're overpaying for one company, that value is going to go up. And since you are hurting yourself by buying assets worth less than what they really are, you're paying more than you should, then your company's value goes down. Perfect example of the difference between fair market value and investment or strategic value. And it got me back to this other thing that I've been thinking about, which is the idea, people are talking about how maybe Trump is going to start his own kind of entertainment or media company. It occurred to me that the same two issues could be in play. So there are plenty of other channels that are currently broadcasting that Trump could come in and, plop down some money and purchase. To do so, he'd have to pay more than their fair market value, but it's because he has a different strategic or investment value. He expects if he can take a media company, kind of slap the Trump label on it and do what he does, then that value would go up. He would expect a good return of his capital over the the time that he owns it. The example that I came up with is there's all these other companies floating out there. So real little channels that are, you can pick them up on antenna, you can find them really deep in cable, but companies that they have a value. It's the value to the market. Companies like Comet and old game show networks that don't show any game shows that have been made in the last 20 years. There's things out there that are broadcasting that they are able to sell advertising revenue or advertisements. They get some revenue from that. It offsets their costs of the production and the shows that they put on, and they end up with a profit at the end of the day, and they can value that. You look at a discounted cash flow model, and you say, hey, we expect a certain amount of money to come through to the investors. You can calculate what that's worth using Gordon growth or whatever kind of valuation metric you want to do. So a multi-period DCF or just a 1 year capitalization of excess earnings is going to give you a pretty good idea of what that TV station would be worth. And then you go back to the Trump example, where if he took over one of those companies, switched all of their broadcasting, switched all of their advertising, just needed to get on air with his content. Now all of a sudden, this company that say we could have valued at say $10 million, to Trump, if he were to come in and acquire that and blow it up, maybe now it's worth $100 million. So the question is, what's the value of that company today? What should it transact at? And the answer, and we'll see if this really comes out, if he really does go out and buy some other companies, it's going to be fairly close to the fair market value, but certainly higher, but it'll be a lot less than what he thinks he could turn it into. So the question is, who really owns that value? Because if there's all these other, there's plenty of places that you could buy if you offer more than what they're worth. In people's eyes, in the market's eyes, the fair market value, a lot of people will take, if it's $10 million, you offer them $12, $13 million, they probably say, sure, I'd like to take that, go retire. So there will be companies out there that would be targets, and a little bit of speculation might roll into some of these companies and some media companies. Their values could be up now, just thinking, ooh, maybe that will be the one that does get acquired. And it's possible none of this actually plays out, but pans out. That it's possible that Trump doesn't go into make his own media organization and everything. But if he does, it'll be interesting to see that headline. And if that headline does come to fruition, it would be basically what we saw here on the MGM case, which is they backed out of a deal to acquire a business at higher than fair market value, which means that company's value is now lower again, and MGM's value is higher. And it'd be the same if Trump decided to take out the game show network and replace it with his stuff, then the game show network's value would go way up. And if Trump had a stock that was selling, his value would go down, although he would be looking to kind of capitalize on that in the future. So anyway, it's an interesting topic. There's all kinds of valuation topics out there. So when I see another headline, I'll let you know if I have some interesting thoughts on it. Thanks.